Welcome back. We're getting tough now because we're almost down 800 points for the Sensex as we speak. We have the Nifty, which is showing a cut of around 250 points. Good time then to get in some opinion from somebody who's a close India watcher. Stephen Birch, the president and CEO of William O'Neill and Company, joins in now. Stephen, thanks very much for taking the time out. How would you approach the Indian markets right now?
Well, it's a crazy day today, and it feels like capitulation. I've been in the market for over 30 years, and we've had days like this in the U.S. market. The counsel that we give our retail clients, we're a research operation, and we like to tell them that this is not a day to be bottom fishing and trying to find opportunities. When a market bottoms, you usually want to wait till the fourth or fifth day to see if it can hold that bottom. You may bounce off this low, there might be some buying that comes in, but oftentimes if it's really extreme, if there's just psychological selling going on where there's no buying, which is what we're seeing today, being off almost, 2%, 2.16, you have to step aside, be careful. Now, the guidance...
There are macro concerns in India, right? We have Brent, which is at over 85, almost 86. We have the rupee, which is depreciated. In that context, how is India as an investment destination at this point?
Well, what I remind every time, I've been in India here for about 6 years. We have an operation here, and the long-term secular growth is still intact. This country has just phenomenal opportunities ahead of it, so you want to keep that in mind. Now, short-term, what's happening today, and these issues with the rupee and with crude oil, that's a concern. We think that the rupee might have to be devalued another 10%. Just looking at the technicals, it could go to 80, 81. Now that's pretty extreme, and people don't want to hear that. But with crude oil being so strong, and I'd advise too, I'd advise people to think about this. At $75 crude, price performs a function. And what that function is, it's going to ration demand, and it's going to bring in supply. I don't know if it's going to, no one knows if it's going to go to $100. There's a lot of conjecture that it might go to 100, and that would be very, very harmful to India and the economy here. But however it plays out, the market will find some equilibrium. And so growth investors, and that's who we typically work with, we like working with equity investors who are looking at innovators and entrepreneurs in your country that are able to, they're doing their job today as this market is going down, they're innovating, they're growing their top line, and they'll continue for the next 2 quarters, 3 quarters, 4 quarters. Those are the names that investors need to be focusing on today. Don't try to find a name that's just sold off and is cheap. That doesn't mean it's a good buy. Go back and look at the companies that are growing at 25% their top line, their revenue, growing their earnings at 25%, have good, strong return on equity, and truly have a competitive moat and a barrier. Those are the type of names that we put on our list for our clients and we talk about, because those are the ones where you'll have an opportunity as this market finds a bottom. And it might take a while. I mean, we are in a correction, and corrections can last.
You have a research operation focused on retail investors here in India.
Yes, yes, we do. It's called MarketSmith. It's
okay. Can you talk about what they've been, a couple of names that they've been sort of recommending?
The MarketSmith it's a subscription retail service for individual investors. We have some proprietary market timing indicators that we relay to those subscribers. We saw what we call distribution, where the Indian market was having trouble about a month ago, rallying. We were having lots of days where it was just sort of churning, and you guys saw this. It was just not making headway. About a week and a half ago, we got a signal in this technical indicator that we were moving the Indian market into a downtrend. So we are currently in a downtrend until proven otherwise, and we're monitoring for a signal to tell us when we get a follow-through in the market, some good, strong buying on huge volume that shows the capitulation is over, buyers are coming back in. We do not have that signal yet. But the names that we have, we run a model portfolio, so most of the names are pharma. Dr. Reddy's Labs is one that we like that was in our model portfolio. It looked like pharma had bottomed and was coming up, and some of those were starting to show some outperformance. That's a classic area to be in during a bear market. It's sort of a defensive growth area, is pharma. We like some of the IT consulting services companies like Mindtree. That's one that we like. They're going to be a beneficiary of the rupee if it continues to depreciate. Tata Consulting, that's one that we like. So defensive growth, some of the metals look interesting. Certainly, we're advising our clients to stay away from banks. Everyone knows that they're not buyable down here. Stay away from airlines. They're just you guys have seen these. These charts look terrible. And stick with stocks that have been somewhat resilient. So there are great names that are selling off in this correction, and they're coming back to 50-day moving averages and others. And that's an opportunity to start maybe making a short list.
Okay. All right, Stephen, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, it is getting even more fierce in terms of a sell-off that we're seeing. Sensex down over 830 points as we speak. The Nifty, which is now almost at the cusp of breaching 10,600. We're going to wrap up on trading up, but stay tuned. Halftime report will take all the action forward.